So good morning and welcome to Broker Briefing, Australia's premier digital platform for brokers and investors, live streaming video presentations from ASX listed companies. I'm Jane Morgan and thank you for joining me today for our June investor webinar. Today we'll be joined by 6 companies: Blue Star Helium, SynergenMet, Coolabah Metals, Rincon Resources, 5E Advanced Materials and Bass Oil. So up first, we are joined by Blue Star Helium with the ticker code BNL, an independent helium exploration and production company. To tell us more, today I am joined by Managing Director and CEO Trent Fry. Good morning, Trent.
Good morning, Jane. Great to be here.
Wonderful. Let me bring up your presentation.
Thank you. Brilliant. Thank you. We'll get straight into it for time. So Blue Star Helium, the leading helium pure play, delivering high-grade, low-cost helium projects in the United States. We're listed on the ASX and the OTCQB. Next slide, please. The disclaimer here is included in a much fuller presentation we have online as well, so you can look at that. Next slide, please. We have a strategic large-scale US land position. We were the early mover in the largest helium market in the world. We have a high-grade green helium resource in Los Alamos County, Colorado. We've been undertaking a low-cost, high-impact exploration and development drilling program, and we've had recent discovery successes at our Galactica and Pegasus prospects, as well as our Voyager prospect, and positive results at Enterprise with 2 wells showing gas on logs. We also have a large additional untested exploration portfolio and clear commercialization pathways in an undersupplied helium market. Next slide, please. So over the last year, we've delivered 4 helium discoveries and we've brought 3 of our prospects into development. So that's an excellent, outstanding exploration result, success rate. We have those discoveries at Voyager, Galactica and Pegasus, and again at Enterprise, gas on logs at 2 different wells. We've got exciting drilling coming up, our Serenity prospect. It's a maiden well on that prospect, and upon success, we have further locations already approved to follow that up. That will be actually starting this month. We've also got 4 helium development locations following up the discoveries at Galactica and Pegasus, set for approval hearing on the 19th of July. Again, they offset the discoveries we just had. 2 wells at Voyager have been permitted or submitted, and 3 are following, again, following up that recent discovery. So based on those discoveries, we've initiated a plan of development and feed studies as well. So initial feed will be at Voyager, which is an excellent discovery that'll be expanded out to Enterprise, and then we'll look at another facility to service Galactica, Pegasus and Serenity. We've got a huge acreage position that we need to service. We're well funded. We raised money late last year for the exploration and early development work, and at the end of the March quarter, we had 13.6 million left in the bank to continue our exploration program. Next slide, please. So helium is a critical technology enabler. It's a high-value commodity with high-tech applications. There's continued supply shortage and strong demand growth, and we're currently seeing a supply crisis, and a result of that is historically high helium prices. Next slide, please. So just to recap on that, strong recent price movement because of the recent supply shocks. There's a lot more on the presentation that we have online that talks about the helium market if people are interested. But what it means for us is the base contract price was around $300 an MCF. We now believe that's around $600 an MCF. There's a growing spot market, which we believe and we hear anecdotally is around $3,000 to $5,000 an MCF for an incredibly high value commodity. Next slide, please. So we were a strategic first mover in Los Alamos County. We've discovered a high-grade green resource and we have excellent proximity to key infrastructure and major consumers. Next slide. This is our acreage here in yellow, so close to 300,000 gross acres. In the green in the middle of the screen there, you can see that's the model dome field. That's an analog field, historic producer. 8% helium, one of the highest concentrations in the US and globally. To the north of that, you have our Voyager discovery where we discovered 8.8% helium, an incredible result. Over to the left of that, Enterprise, where we have gas on logs and we'll be testing the Enterprise well soon. To the south, you can see clusters of leases forming over prospects yet to be drilled that we will roll out soon. Over on the right, you have the Cynthia True discovery, another 8.8% helium concentration, incredibly high, and our Galactica and Pegasus prospect, where we've recently had discoveries of 2 to 3%. And immediately to the southeast and adjacent is the Serenity prospect, which we have our well coming up at the end of this month. So exciting times ahead. Next slide, please. We have substantial shallow resources and deeper plays. So what we've been talking about so far is our Lions helium play, where we have those prospects that we've discussed. So 13.4 BCF of prospective helium resource net to Blue Star. That does not include Voyager, where we've already had a discovery, and it does not include Serenity, where we have drilling coming up at the end of the month. So again, incredibly high concentrations that we've discovered and historically in this area. Below that, we have the Leviathan project, which is our deeper play concepts and secondary targets. So there's a well, Catherine Mock, that discovered 2.2% helium in the Pennsylvanian. We have a very unique formation, the Los Animas formation, sitting on top of basement, and they represent the source of the helium in the area. So they're going to be incredible targets going forward for our exploration program. Next slide, please. So you can see we've been accelerating the portfolio. We've gone from exploration program with outstanding success now into plan of development and feed, but that exploration program will continue ahead. Next slide. Next slide, please. So we've already gone through the exploration program. We won't talk about those results, but we'll just recap on the forward plan. So workover and testing at Enterprise coming up soon. First well at Serenity prospect, 4 helium locations to follow up discoveries at Galactica and Pegasus, 2 already in and another 3 coming to follow up the discovery at Voyager. And that successful exploration program that's front run those appraisal and development wells will continue. You'll see prospects like Prometheus being rolled out soon, and you can see we have 47 wells in process for drilling. Next slide, please. So we'll just go through some of the discoveries quickly. We'll just look at the cross sections to save some time, but this is the Voyager discovery. On the right-hand side of the cross section, we have the model dome analog, 8% in the Lions formation. Go across to the left, and we mapped Voyager on historic wells and water wells, tested it with the BBB well, and discovered 134 foot of gas, 8.8% helium. So an incredible result, moving us into appraisal and development. Next slide, please. Looking at Galactica, again, this was one of our exciting prospects. We had a historic well at Denton B1. We looked at the old logs, interpreted gas there, followed that up with the Jackson 3 well, and had a discovery and proved 234 foot of gas, over 2% helium, an incredible result. Those wells are 6.4 miles apart, so it's a large closure, and you can see how much of the area we have leased in the yellow on the map on the right. So we were very confident going into this prospect. Next slide, please. Moving across to Pegasus, which is adjacent to Galactica, similar situation, historic well that we interpreted gas to exist in the Lions. It was a missed pay, essentially. We followed it up with the Jackson 2 well, confirmed a 222 foot gas column, over 3% helium. And then Jackson 1 was meant to be a test between those 2 prospects, but also saw 217 foot plus gas column at 2%. So a great result. And again, large closure on this overall structural high that we have the dominant leasing position of. Next slide. Serenity, this is our upcoming well. This is starting at the end of the month. And again, similar situation. There's a historic well there, State 3053. We've interpreted gas on the historic logs. That well was targeting a much deeper play back in the day. The Serenity prospect includes that well and a structurally independent up-dip test, which is the one that's being tested at the end of this month. So, like I said, we have 3 follow-up well locations there as well, that upon success, we can follow up. Next slide, please.
Trent, I apologize there. That was my internet having some issues at the moment. Let me just quickly pull this back up for you.
No worries. We almost got there. It's just the summary slide.
That's all right. Let me pull straight to the end for you. This one?
Yeah, that one. That's it. Yeah, so it's really just a recap. That we had the exploration program underway. It's been very successful and it's continuing. we've talked about the recent successes, and we have upcoming operations, the maiden well at Serenity, the Enterprise workover, future drilling at Galactica Pegasus, and you'll see other prospects like Prometheus rollout. We've followed up the discoveries with offset development well permits, and obviously we'll be upgrading our current resources based on those discoveries and growing that resource base with further exploration success. In parallel, the plan of development and feed has been initiated. So thank you very much.
Thank you for that, Trent. And again, I apologise. We've had quite a few questions come through, so let me jump into them. So when can you expect to receive the resource estimate for the Galactica, Pegasus and Voyager prospects?
So Galactica and Pegasus are targeting Q3.
Wonderful. And then, so in the latest AGM, excluding Enterprise and Salmons, it was mentioned that the company intends to drill another 8 wells during the second half of 2022. Can you just please confirm that the company is confident with this timeline?
Yeah, we're relatively confident. We have the permitting portion of that we don't have a lot of control over with the COGCC, but we believe we've got enough in play that we can achieve that.
Wonderful, and just time for one more. So does Blue Star plan to follow a low capital intensive development path to get some early wells into production to generate cash flow for further exploration?
We're definitely looking at that as an option, for sure. There are multiple options we have where we could lease a plant or we could start with a smaller plant, but that's definitely all part of the plan of development.
Wonderful. Well, Trent, that's all we actually have time for today. There have been quite a few other questions that have come through, which we'll forward on to you. But I would encourage webinar attendees to reach out to Trent by the contact details on the bottom of the ASX releases. But thanks for joining us.
Brilliant. Thank you, Jane.
So up next, we have a presentation from an upcoming IPO, which is SynergenMet, a thermal plasma technology specialist. To tell us more, today I am joined by Managing Director and CEO, Christopher Dunks. Good morning, Christopher.
Hi, how you going? Good morning. How are you going?
Good. Let me just bring up your presentation.
No problem. Get started?
Off you go.
Okay, no worries. Maybe if you can push through about 2 slides. It's who are we and what we do. So SynergenMet is a Brisbane-based company. We've been operating since 2007, so 15 years in development, and really what our specialty is we're a clean tech company. We're using this technology called thermal plasma to do a number of things, a number of different business lines, and to building a business based out of our operations here in Brisbane. So we're generating income through selling industrial plasma equipment through a subsidiary of ours based in the United States. We treat and destroy toxic liquid waste, which is Pfas, toxic waste, and I'll talk a lot more detail about how we do that in a moment. And we're also developing and have developed an application where we split methane to make hydrogen and carbon black for different industries. We're moving into this hydrogen space with a slightly different business model than what you've been reading about in the press. And I'll talk about that in a little bit more detail in a moment. But we're based here in Brisbane. We're an Australian company. It's Australian innovation. And really what we're doing here is we're providing a real option for decarbonisation and for detoxification in the industrial market. At the AFR ESG summit that happened this week, there's a lot of discussion around greenwashing and around being realistic about how companies are looking to decarbonise. We are a company, Synergen is a company that can provide that opportunity for decarbonisation, particularly using natural gas and by splitting that to make hydrogen and carbon black. And also by, in the environmental space, the Pfas issues becoming much more relevant to the industrial community. Some really interesting decisions coming out of the United States this morning, which I'll talk about as well, which will impact us in a positive way. So if you wouldn't mind moving to the next slide. So Synergen is based here in Brisbane. We are currently in the middle of an IPO. That IPO closes next Friday. We're raising $20 million to really grow this business hard and grow this business in a sustainable but but long-term, with a long-term view here and in the United States. What I'll talk about this morning will be measured in what I can talk about from a forward-looking statement perspective, given that we're in an IPO, but I really provide everything that I can so that everyone watching this webinar can get a good understanding of what we are. I do realize I only have about 6 or 7 minutes left, but so our ticker will be SH2. IPO is going well, and we're looking at these business lines: hydrogen production, the destruction of Pfas, and Phoenix Solutions Co., which is an existing 60-year-old business which we've acquired based out of Minneapolis in Minnesota that sells plasma heating systems. Next slide, please. So talk about our hydrogen production. We produce hydrogen by splitting natural gas or biomethane directly into hydrogen and solid carbon. So we have 2 revenue streams with our hydrogen production, which is hydrogen and carbon black. Having those 2 revenue streams actually is a very strong economic prospect for anyone that's actually implementing this technology. We're not relying purely on that hydrogen revenue stream to make the business model work, and that carbon black and value adding to that carbon black is really very much in the forefront of our development over the next 12 to 24 months in generating a lot of value out of that carbon. And by generating more value out of that carbon that we generate from this process it means that a hydrogen price can come right down. It's a very exciting area, and I'll explain it to you how it works in now. Can you just skip ahead 2 slides, Jane? Sorry. Next one. This is it. So how does this work? It's fairly simple in concept. We take natural gas or biomethane. This is going to be coming from it can be coming from a coal seam gas well, from a conventional gas well. It can come from a gas pipeline into an industrial facility where our equipment is located. This is modular plant. It sits and it co-locates with the end user's requirement for the use of hydrogen. And we take that natural gas, we condition it to make sure that there's very low impurities and it's a high concentration of gas. And we run that through our plasma system. So plasma is essentially generating an electric current in a gas. And that electric current is a very high temperature and has a lot of energy. And that splits that CH4 into carbons and hydrogens. That hydrogen is very high concentration, and the carbon then drops out of the gas phase and becomes a very high spec carbon black product. And those 2 products are separated. The hydrogen can be stored or used immediately as a basic hydrogen without being refined to be used in vehicles, for example. And the carbon black is captured and can be used into the global carbon black market. And we are looking at adding value to that carbon black by creating other products where there is a higher value return from that carbon material. You just go back 1 step, please, Jane. So clean hydrogen production from methane pyrolysis is a really interesting process. It's different from what you're hearing in the press about green hydrogen, inverted commas, green hydrogen. This is a very simple process that we don't use water in our process. We're not consuming water. Electrolysis consumes 9 kilos of water for every kilogram of hydrogen that's generated. We don't consume any water here. We're literally just splitting natural gas. If we have renewable energy generated, which is used to power our process, there's no greenhouse gas emissions generated, and our product is as clean as green hydrogen. It's a very scalable process here. We're looking at a market which is very different from what you've been hearing in the press. We're looking at markets where we're co-locating with the customer and the end user. We don't need massive plant. We don't need massive transport. We just butt into the existing infrastructure that is on that site. For example, if we're working in the coal mines, we're taking degassed methane from those mines. We put our plant right there, and the hydrogen can be used straight away. If we're working with an industrial customer where they're wanting to turn their methane into hydrogen to use for heating, we can locate our equipment on that site. So there's no cost for transportation of hydrogen, which is $4 a kilo. So that's a major part of that cost, which everyone's trying to get down. The elemental carbon black products, as I've talked about, can be sold for various different purposes and has a revenue stream. We can rapidly roll these out. We'll be running our first project at the beginning of next year with a group called Telford Energy. I'll talk about that in a minute. And we can roll these out very, very quickly. We'll be in operation early next year. A lot of these green hydrogen projects won't be operational until 2025, 26, but we'll be making hydrogen early next year. Our process utilizes a third of the energy input that electrolysis has to produce the same amount of hydrogen. So it's a very thermally efficient process, and therefore it makes it very cost efficient. And I'm wondering if you could just jump to 2 slides. So our first project here is with a group called Talau Energy. They're a Brisbane-based group that has a large coal seam gas field in Botswana. We're building a pilot small commercial scale unit there with them. It's about 130 kilos a day of hydrogen production, about 400 kilos of carbon production. So in detailed engineering, it will be starting next week on this project. We're looking to kick that off and actually be operating it on site early next year. We'll be fabricating and assembling this plant at our own facility in Brisbane in a suburb called Wacol, and we'll be doing a factory acceptance test there as well, and then packaging it up and sending it across. So it's a plug and play facility on site. Talau have a very advanced group on site. They know exactly what they're doing. They're running this gas field and they'll be operating this equipment. So we're really excited to be working with Talau on this first project. We have many projects that are being lined up, second, third, and fourth projects will be coming on stream sometime in 2023, early 2024. There's a lot of attention on our technology because of the offering of not requiring new infrastructure, being able to butt into the existing infrastructure, and the costs that are generated out of this are very competitive. So very excited about our hydrogen application, and we're getting a lot of attention for it. So coming into this IPO process, we've got a real application here which can decarbonize, and are very excited to roll this out. So Jane, do you just want to move on to the next slide? Our next application here is destruction of Pfas. I'm assuming that most people have seen press about Pfas. Pfas are toxic molecules that are found in modern life, in water and in soil and in concrete. And so a subsidiary of ours, we've invented a process to concentrate the Pfas molecules using a froth flotation process. And then we've invented a process where we can destroy those molecules safely. And to our knowledge, we're the only company that we know of that can actually destroy these chemicals properly and safely and bind them into something else, which is non-toxic, which I'll talk about in a second. You just want to go on to the next slide, please, Jane. So Pfas are called forever chemicals, and the reason why they're called forever chemicals is there's a fluorine-carbon bond in the molecular chain, which is incredibly strong. And to break that fluorine-carbon bond, you need to expose it to very high energy. And from our perspective, that's more than 1450 degrees Celsius, which is what we can do. But the problem is when you expose that energy and you split apart that molecule, that fluorine wants to recombine back into Pfas or other nasty molecules. So what we do is we bind that fluorine with hydrogen. We make hydrogen fluoride, which we scrub, and we end up with calcium fluoride, which is in your toothpaste. So it's a non-toxic end product that won't leach and won't cause any medical or health issues in the environment. So we've come up with these two processes. If you want to move on to the next slide, please, Jane. Come up with these two processes. So we concentrate the Pfas using froth flotation, and then we destroy it using this plasma system, which is proprietary to us. This is all our internal IP. It's Australian IP. We've been working with the University of Queensland under an Australian Research Council grant for the last few years to make this work. We're very, very proud of what we've been able to achieve. And we've done this test work on groundwater, on construction water. We've done it on AFFF, which is the firefighting foam, which is very high concentration of Pfas. We've done it on wastewater treatment plant sludge water, and we've done it on landfill leachate. The Pfas market is exploding. The understanding of where Pfas is in the environment and in our modern life is suddenly starting to become made more aware. I mean, it's in every leachate under a waste dump that's been running since 1960. It's in every wastewater treatment plant on the planet. It's in soil and water that sit under every airport. This stuff is everywhere. This is a significant problem that the world's facing, and the opportunities for us as a company coming to market with this technology is absolutely fantastic. Just want to move on to the next slide, please. We've just finished a trial. It's a commercial trial at a waste dump in southeast Queensland, where we were processing 20,000 litres a day of concentrate of Pfas in leachate. Leachate's the very nasty water, and we were removing 100% of the large chain and the medium chain Pfas molecules and then destroying those. So we're at a point where we're rolling this out on a commercial scale, and we're building the team based around that. And a lot of our IPO proceeds will be used to roll these projects out here and in the United States. We're building a destruction facility in Brisbane, and we're also building a destruction facility in South Carolina, where there is a significant issue with Pfas. So I think I'm running out of time, Jane. Is that right?
We're running, yes, slightly running out, but we continue going.
No worries. So if we just want to move on to 2 or 3 slides, we'll talk about Phoenix Solutions. So we've acquired this company called Phoenix Solutions Co. They're based in Minneapolis, a suburb of Minneapolis called Plymouth in Minnesota. I want to go on to the next slide. And then the next one after this actually is probably the best one. So Phoenix Solutions is, they've been around for 60 years. They're one of the 2 leading plasma equipment suppliers on the planet. They have a team of 18. Their technology is used for melting incinerator ash in Japan. It's used for destroying toxic waste with Kobe steel. They've been working in Japan for about 30 years. They've got 6 different sites where they're continually in continuous operation. And their equipment is being more and more utilized for gasification of waste, meaning very, very high temperature separation, splitting of waste down into their base elements, and then forming of that forms a syngas, and you can burn or use that syngas for generation of energy. So Phoenix Solution are our main supplier for our hydrogen technology, and we decided last year that the company was really needed some financing and needed some financial support. And the best way for us to move forward as a business was to have them as one of our subsidiaries. They've got a strong forward book of revenue. When we list and when we start trading, that revenue stream obviously will give us a good foundation of income moving forward as we build the Pfas and the hydrogen business lines. And they also have a tremendous technical capability. So really what Phoenix bring is this core of this plasma technology. And what Synergen has done is we've got a team around that technology, and we're looking at all the different applications that we can use on the decarbonisation space, also detoxification space. I'm really excited about this acquisition and bringing the team on board, and they're very excited to come on board with us. We acquired them for scrip, we paid down some debt, and now we're looking forward to really leveraging through this IPO their capability and to grow it very strongly globally. So just very, very simply, if we just go to the next slide and then I can finish up, Jane. Sorry, the next one after this. We're currently in an IPO. We're raising $20 million. We're going to be coming through with a 120 million market cap. The use of funds is going to be to roll out hydrogen projects, to roll out multiple PFAS projects, to develop a value add in this carbon material that we're producing, and also to fund this Phoenix Solutions company with a strong working capital facility so they can really leverage into the global market more than they've been able to do in the past. So it's been my pleasure to be able to present to everybody today. It's a slightly different talk than what you've probably been looking at before this, but we're really excited to come to market. We think that we're going to make a big difference in this clean tech space, and we're looking forward to doing more webinars with Jane over the next 12 to 18 months.
Well, Chris, thank you for the great presentation. We've run slightly over, but I will jump into one question from a Twitter our attendee actually. So you mentioned that the first unit is being manufactured in Australia. However, yes. Is there an option to manufacture overseas, perhaps close to the installation location? I mean, the project that you're working with in Botswana.
Yes, certainly in 12, 24, 36 months. So the plan, we've done this before with other applications where we've fabricated them ourselves. And the learnings that we've done 2 different options. We had a third party fabricate, and then we did the assembly ourselves. And the learnings that we generated when we did it ourselves was really significant. So the first, second, third projects will be fabricated and assembled by ourselves. The detailed fabrication will be done by third parties, but really assembled, pre-commissioned, commissioned by us. And the learnings are significant. So we need the team to be able to understand exactly what we're doing, how we're putting it all together, and then roll those learnings into option number 2, number 3. And then we'll be looking for third-party fabrication. For example, South Africa has fabulous fabrication capability, but we don't want to go there until we've actually had this understanding of what we're actually doing, so that we can make sure that that's done properly when it's offshore.
Wonderful. Well, Chris, that is all we have time for. There are a few other questions, so I will forward them through to you. But
awesome.
For any webinar attendees who are interested in participating in the IPO, you can reach out to us at info@brokerbriefing.com and we can pass on your details.
Thank you, Jen.
Good luck with the prospectus, and we'll speak to you soon.
Thank you. Cheers.
So next up, we have a presentation from another upcoming IPO, Coolabah Metals. To tell us more about their Australian exploration projects, I will now hand you over to Managing Director Cameron Provost and Non-Executive Director and Geologist David Ward. Good morning, gentlemen.
Good morning.
Let me bring up your presentation. There we go. Off you go.
I can't hear you, Cameron.
Yeah, I can hear you.
Yep.
Yep, off you go. Can you
Sorry,
see the
Cameron.
slide?
Yeah, sorry. Yeah, Cameron was going to start. I think he's having a bit of trouble with his audio there.
Oh, okay. Right. Cameron, with your audio, if you just go down to where the mute, oh, he's gone.
Okay. We'll just launch in. Coolabah Metals is an IPO which is closing very shortly. Is a exploration projects copper and gold in New South Wales, in central New South Wales, and in Queensland. If you just skip through to the next slide. There's the current team. Cameron might jump in here at some page if he gets back in. So there's three members of the board. Steve, Cameron, and myself. Between us have an enormous amount of experience in corporate and exploration, geology, and mining, mainly in New South Wales. You can see that Steve Woodham, he was a founding director of YTC Resources, now Aurelia, and we'll talk about Aurelia shortly. So here comes Cameron. Skip to the next slide, please. Are you there now, Cameron?
Hello, can you hear me now?
Yep.
Oh, I'm very sorry about that.
We've made a bit of a start already.
Thank you very much, Jane, for having us, and thank you for everybody's time today. It's really exciting to talk about our 8 tenements spread across 3 projects in what we say is 2 prolific Tier 1 regions, our world-class Lachlan Fold Belt and our world-class Mount Isa block. So you can see on there our highly prospective tenements. As we mentioned, the Gunpowder Creek project, which is 1 tenement with historic gold workings, and as we said, our expert geologist David will talk about these in a little bit more detail. We've got our Coolabah project, which is 4 tenements, and we talk about our VMS, our deformed and remobilised Bessie-type volcanic massive sulphide, and there's some excellent discoveries in such close proximity to our Coolabah project. And then we've got our 3rd project called the Nymagee project, which is close proximity to known high-grade polymetallic style deposits. One slide which I'm sure you skipped over was our experienced team, which is in our slide there. And our second slide, you can talk about the broad skill set of all 3 of us as a board, which is adding value on so many different levels, which is really important to us. Then we can talk, and obviously we all talk about the global demand for copper, which is that clean energy and the reliance on copper, which is renewable power, which is the strategy of all governments globally. It's going to be up to 12 times the traditional usage of the demands on copper. So that demand is not going away in the short term. The other things there in a summary overview, we've got numerous targets which I touched on, geological and geophysical targets that have been identified. We've got a really systematic and intensive exploration program to target and do some more geophysical surveying, and then we're into the drilling process. The other good thing with our 3 projects across these 2 significant areas is that ease of access. And before we get into a little bit of detail, as we said, we've got the Gunpowder Creek, the Coolabah and Nymagee projects in our Cobar district, a world-class Lachlan Fold Belt, and the Gunpowder Creek and our Mount Isa block. So it's 3 significant and exciting projects, which I'll hand over to our geologist, David, to go into a little bit of detail.
No worries, Cameron. Thanks, mate. Fundamentally, Coolabah and Nymagee are 2 of the key projects in this space. So they are adjacent to existing operating mines that have been around for some time. So the Coolabah project is adjacent to AEST's Triton deposit, which is Triton mine, which is a copper mine currently operating. It's been operating for many years. They're just about to ramp up to 30,000 tonnes per annum of copper. And the key component here is their recent discovery, the Constellation Discovery, which was just very recent. And then with the Nymagee project is very, very similar in that it has an existing operating mine, the Hera mine, and they've made another significant discovery just 10 kilometres south, the Federation deposit. So I'll go through a little bit about how they found them, because we're just going to follow the same path. It's all open file understanding of how these exploration projects were discovered, and we'll go down that path ourselves. So Coolabah project, which is just alongside AEST's Triton deposit. So they've just discovered the Constellation deposit just recently in the last 12 months or so. So they discovered that using some fairly standard airborne electromagnetic surveys, which is effectively it creates an electromagnetic field. It's just a giant metal detector. So we have our own giant metal detector contractors on the way, and they'll be starting very soon after we list. So the Constellation Discovery was found using this method. The first drill hole drilled into the copper deposit was something along the lines of 23 metres at 2.5% copper in the first drill hole. I think the second drill hole the grades might have been up to 22% copper and significant gold and silver. So just skip on to the next slide, please. So this is basically a geology map of the Coolabah project. So you can see that on the left-hand side, they just have an inset. There's some very large exploration licenses. There's nearly 1,200 square kilometres of exploration licenses adjacent to the AEST project. So all of those deposits that are listed there show them as either drill intercepts or resources. So the Triton mine is operating. Some of these deposits are in the process of being developed at the moment. So Budgerigar is development going in there now. Avoca Tank, which is about 5 kilometres off the exploration licence boundary, is under development at the moment. The Constellation deposit on the top right-hand side, that is the new discovery that has been made. The Kurrajong deposit has had some significant drill intersections under it recently, along with Avoca Tank. So there's been a lot of deposits found and under development just immediately adjacent to the existing exploration licenses. So on the right-hand side, you can see another inset of same slide of that central lease, that 9287, which we call Coolabah. There's actually significant copper anomalism at surface. So that is also associated with a magnetic high. So some of these deposits display a magnetic anomalism as well, which is magnetite alteration associated with the deposits. So that's a great target that we'll be looking at doing electromagnetic surveys almost immediately after listing. So there's the Coolabah project, a bit of an overview. If you go on to the next slide, we can go to Nymagee. So Nymagee is not really that far away. It's just onto the south of the Coolabah project. The mineralisation styles there are slightly different. These are what are deemed to be Cobar style deposits. So you can see Cobar up to the top right, at the top left-hand side of the map. So for those of you that are not familiar with Cobar, Cobar is a tier 1 mining region. Glencore just recently sold their CSA deposit there for $1.1 billion and been operating for 100 years on and off. These are really significant high-grade copper gold deposits at Cobar and gold, lead, zinc deposits at Nymagee. Will you go on to the next slide, please? So some of the one of the significant movements in the geological understanding for the Nymagee area is some work that has been done recently by the New South Wales Geological Survey. So for many years, these deposits were deemed to be VMS, or seafloor exhalative sulfide deposits, which were constrained to one specific stratigraphic horizon. So that's the image on the left-hand side. You can see that in order to be in that one stratigraphic horizon, we need to be in that one prospective corridor. And that's where a lot of the exploration work has been focused on, finding those deposits. And they have actually found deposits, the Federation deposit in the south, which they've just recently put a box cut into. But the new models for geological understanding for those deposits suggest now that they're actually intrusive related, so they're distal intrusive related deposits, which means they won't be confined to that one narrow horizon. So the image on the right hand side, you can see that this is what is our interpreted new prospective corridor for those style of deposits. So within those areas, there's geochemical anomalies, there's geophysical anomalies that are similar to those seen here in Nymagee and Federation, and we'll be launching into some exploration on those project areas very soon after listing. So there's a basic rundown on the Nymagee project. We'll skip to the next project. So we're up into Queensland now, just next to Mount Isa. So the Gunpowder project is, if you skip to the next slide, you can see the next slide, please. There's a geology and magnetic maps for the Gunpowder project. So you can see on the left-hand side, on the left-hand image, there's in the middle, in between Mount Isa and the Gunpowder project, is a large granite, a large half-circular-looking granite. On the right-hand side of the granite is the Mount Isa fault, which hosts the Mount Isa and George Fisher deposits, some of the biggest metal deposits in the planet. On the left-hand side, there is also another fault on the western side of the granite. In this case, the deposits that are exposed at surface are actually gold workings, so old historic workings and adits that have some significant gold anomalism. So on the image on the right-hand side, you can see there's gold rock chip samples there up to 1 ounce per tonne. So these things are outcropping and they've never had a drill hole into it. So the methodology for the Gunpowder project is going to be pretty simple. We're just going to be sampling some of these outcropping workings, working out which ones have the best grades, and obviously there's one there straight up, and roll out a drilling rig and drill underneath the old workings. It's a pretty straightforward method. So that's a bit of a rundown on the geology of the 3 main project areas. So I'll hand back to Cameron to wrap it up.
Thank you, Dave, and thank you, Jane. As you can see, just that quick summary of the allocation of funds being the IPO. Our fundraising initiative here is raising $6 million at 20 cents a share. We can flick over to the timeline on the next phase. Thank you, Jane. This is our near-term milestones, and going back and summarising the initiatives being in this world-class terrain, you can see that with our timing all being well, we're just finalising a few things. It's the process of this IPO strategy and implementation, aiming to have our listing done very, very shortly. We have been working on, as Dave mentioned, the electromagnetic survey for Coolabah. We've put that into a timeline to be done as soon as possible. We have been working on that, the implementation of that initiative for many months. The gravity survey at Nymagee is also an initiative that we have been working on for many months to see these 2 significant things, which is the gravity survey and the airborne survey, and some geochem things happening in our next quarter, so we can hit the ground running and have some market announcements as soon as possible, all being well. And then you can see throughout the timeline of working on further drilling EM anomalies, and then that downhole electromagnetic survey at Coolabah. So we've got a number of initiatives and some geochem work at Mount Isa. So you can see that we've done as much as we can, tied as much as we can into that first and second quarter for this year. These are projects we've been working on for the past 6 months to enable these things to be put into place as soon as possible. And certainly it's all about keeping our market and investors up to date on these initiatives. And in summary, yes, it's very exciting to be in 2 world-class terrains, being a Lachlan Fold Belt and the Mount Isa block. And as Dave mentioned, the significant discoveries, exciting discoveries nearby, and ours is simply underexplored. There's a number of targets that we have that have not been drilled, and we've got that clear strategy in our near-term milestones, which is some of the things, as we spoke about, the EM survey, gravity surveys. They're simple, proven methods to target our and refine our target drilling initiatives. So that hopefully summarises our 3 projects. Thank you, Jane.
Well, thank you, gentlemen, for the great presentation. We've had a few questions come through, but I might actually reword this. So with the drill rigs, with the 3 drill rig targets that you've got lined up, have you got a drill rig ready to roll as soon as we get back onto, as soon as you get to hit the boards?
Yeah, so I'll get that one, Cam. I also represent the vendor of the exploration licenses, Bacchus Resources. So Bacchus has a sister company, AMWD, which is a drilling company, Australian Mineral Waterwell Drilling. We have drilling rigs at our disposal.
Oh, wonderful. Okay, and
good question. Thank you, Jane. Really important to us. We've got our 3 targets. So yes, that's another thing that, just reinforced. Good question that we've been working on over the last couple of months to ensure, yes, we've got those rigs ready to go.
Well, just on that as well then, so what project are you most excited about?
Oh, look, all 3, but as we've got, the number 1 is the Coolabah, all about that copper demand. So we've got our that's why we're doing that EM survey as quickly and as soon as possible. So yes, look, they're all 3 exciting projects, but I'd put the copper one at Coolabah. If you want me to pick one, well then be Coolabah. Hence our company name being Coolabah Metals. Yeah.
Well, gentlemen, thank you so much for joining us today. That's all we do have time for. A copy of today's presentation will be available online on brokerbriefing.com in the coming days. And again, if you're interested in participating in the IPO, please feel free to reach out via info@brokerbriefing.com, and we can pass on the details to Cameron and David. But thank you for joining us, gentlemen.
Thank you.
Thank you, Jane.
So up next, we have a presentation from Rincon Resources with the ticker code RCR, a copper gold explorer with projects in Western Australia. To tell us more, I'm joined by the Managing Director, Gary Harvey. Hello, Gary.
Hi, Jane. How are you? Thank you for having me.
Great, thank you. Let me bring up your presentation. When you're ready.
Okay, thank you. So Rincon Resources, we're a 2-year-old company. We floated in December 2020, and we've been busily working three projects in our portfolio. We're a copper gold explorer. All our projects are in WA. Next slide, thanks, Jane. Sorry, next one. Okay, so just the overview, the investment opportunity. Rincon has a tight shareholding, 51.3 million shares. We've got 2.5 million options. We've got $1.9 million cash, and we've got really good, strong top 20 shareholder support. We've got a tight capital structure, and we've got low free float. Now, we just move into our projects. You can see there on the right-hand side that we're sort of spread around the state of WA. Our flagship project is the South Telford Copper Gold Project. Now, this has been the major focus of our exploration activities since we floated, and for obvious reasons. The Paterson province is considered elephant country. It's a tier 1 location. And I think we're all aware of the major deposits that have existed in Telford, but also recent major discoveries at Havron and Wanu. And, you know, Rincon, we want to be part of that story. We think we've got a really good opportunity, and our portfolio is directly surrounding Telford gold mine. So we're in a really good spot, and we're hungry for success. Our South Telford project is complemented with two other projects. We have the Kiwi IACG project in the Western Runter region, where we have multiple IACG targets for testing there, and we've got 3,000 metres of diamond and RC drilling planned. We're just waiting on final access to get out there and start that program, and we hope to commence activities out there in the second half of the year. And our third project is the Laverton Gold Project, essentially in the heart of the Laverton Gold District, another Tier 1 gold district. And we did some early drilling there back in early 2021, with a number of gold targets that we intend to follow up over the course of time. Next slide, thanks, John. So I'm going to focus heavily here, I think, on the South Telford copper gold project. It is our flagship project, and again, just reiterating, it's home to a number of multiple million-ounce gold deposits, and indeed copper deposits with Wanu. You can see that you know, there's some significant deposits there. On the left-hand side is highlighted in the red outline there. You can see our tenements, proximity to Telford gold mine, also Havron, and I think really importantly, our western tenement area, the larger of our tenement package there, encompasses over 25 kilometres of extended strike of the actual Telford gold mine trend. And I'll talk a little bit more about that. But essentially our package contains two strategic mineralised trends. One we refer to as the Telford Western Trend, and the second one is the Hastings Rose Trend. Next slide, thanks. So this is a fairly intensive slide for you to read through, but it really gives us an overview of what we have and what we've done. And so we've got prospects on here. Our Hastings prospect is really been the focus of our drilling. Our Hastings is an outcropping copper gold system. It's just 12 kilometres as the crow flies from the Telford gold mine, so there's pretty good access to a very hungry mill at Telford. We've been doing some RC drilling and some diamond drilling at Hastings over the last year. Indeed, we've just completed a deep diamond hole with results pending. And you can see on the left-hand side some of the really nice thick intersections that we've achieved. It's pretty much close from surface. The Hastings deposit extends down about 150 metres and still remains open along strike in at depth, and we'll continue to work at Hastings whilst we start testing our additional targets along those two key trends that I've just mentioned. So the second half of the year is going to be quite exciting for us. We've got further RC and air core drilling to start testing some new targets. Just some of the other prospects, most of these actually sit currently in the Hastings, or we refer to as the Hastings tenement area. We've got the Frenchman's prospect. This is 900 metres north of Hastings. There's been historical drilling there, 39 metres, 0.2. We drilled one hole underneath it just to have a quick look when we were doing drilling at Hastings. We intercepted 4 metres at 1.74. That should be grams per tonne of gold. Sorry, not percent. And one at 2.34 grams per tonne. And indeed, Frenchman's, there's outcropping copper-bearing gossans at the surface as well. So we know the copper's there. This is just another prospect that we need to follow up and test strike and depth potential. And recently we've just highlighted the new Curly Hill prospect. Now, this is a prospect where at surface there's over 200 metres of outcropping malachite, oxidised copper-bearing gossan. Limited drilling historically by Newcrest, and we've identified that there's over 2 kilometres of strike that's been untested extending from that Curly Hill gossan. So we're excited about testing that in the near future as well. And the two key highlights, the two mineralised trends that I've been referring to, both sliding to our western tenement area. Again, we've got over 25 kilometres of both those trends in that Western Tenement area. Now, this is an area that's had very limited drilling in the past, shallow drilling. There's been one hole intercepting 8 metres at 3.85 grams per tonne there by Newcrest, and no real follow-up since the late 90s. So we're really just getting our permitting in place and our access into that area sorted out. We've got a heritage survey due in July, and once that's completed, we should be in there with over 5,000 metres of aircore drilling to start with, start testing some of these targets that we've identified in that Western prospect area. Next slide, thanks, Jack. I just referred to previously, I just touched on the fact that we've recently completed a deep diamond hole. Now at Hastings, now this was a diamond hole that we chose to drill to test a deep intrusive dolerite sill that was modelled underneath the Hastings main zone and Hastings southeast zone at the Hastings prospect. Now those two mineralised zones, you can see in that central figure there, two mineralised zones effectively sit up near the surface. They're related to an anticlinal fold hinge, which is analogous to the Telford style of mineralisation. We have these reefs and breccias associated with these fold hinge zones. Now, with geophysics, we did some IP geophysics and combined that with the aeromagnetics. We've modelled this dolerite surface at depth, which is about 300 metres below the Hastings shallow mineralisation. And we chose to test this with a deep diamond hole, which was EIS funded. That hole was recently completed as about a month ago. We're told we're just about to receive assays for that hole in the coming weeks. Now, this is a fairly exciting hole. You can see some images there on the right-hand side. There is sulfide mineralisation, there's breccia zones, and there's certainly a lot of alteration that was visible. So we're confident we're into something that's potentially has the ability to host a significant size zone of mineralisation. And this is just the beginning. So what we're going to be doing once we receive the results of this diamond drill hole is to review those results in conjunction with all the previous RC drilling we've done and really focus on where do we drill our next holes as we continue to try and develop the Hastings system, which we think has got potential for some good scale and something that I think Newcrest and that mill at Telford would like to see come their way in the not too distant future. Next slide, thanks. Okay, so our next project is the Kiwi Iacd project. Now we've got a reasonably significant holding in that area. We've got over 220 square kilometres. Now the Western Runter region is pretty much a frontier exploration area, highly prospective for Iacd copper, and we think we've got one of the best targets in that area at Carly. Carly was drilled back in the mid-2000s by a company called Ashburton Minerals. They intersected multiple zones of wide copper mineralisation, and the work that we've done leading up to this has really identified that that mineralisation previously intersected appears to be or interpreted to be sitting above a potential deeper source of that controlling that mineralisation. So with the help of our geophysicists, we've had a number of targets developed, not just over Carly, but over our tenement package. And two of those targets we think are quite compelling. And we've got two diamond holes planned to test those targets as soon as we get our access approved. And those two deep diamond holes, again, are both EIS co-funded by WA government. Thank you. And so we really look forward to testing those targets. And the outcome of that drilling will obviously determine how we progress that project. But we think it's, we think this is a really good project, and I'm actually quite keen on getting out there in the not too distant future. So we've got up to 3,000 metres in total. So that's diamond and RC drilling proposed to test Pyrolysis and some targets around Pyrolysis, and we'll look to start hopefully doing that in the next 6 months. Next slide, thank you. So our final project is the Laverton Gold Project. This was a project that we started work first, post-IPO. We did over 6,000 metres of air core drilling. We tested 4 areas, areas 1 to 3, as you can see on the right-hand side map, and a geochemical anomaly called GG anomaly. Of that drilling, two areas showed up as being, warranting further work. Areas 1 and 2, where we intersected modest zones of low level at this stage, supergene mineralisation. But both those zones were related to prospective structures, in particular area 2, which was related to a banded iron formation at depth. That banded iron formation is host to multiple shallow gold deposits at the Gladiator Mining Centre, just north of our boundary. And that structural corridor related to that banded iron formation actually trends down to the south, and just offset from that is the Wallaby gold mine, which is a 7 million ounce gold deposit, as some of you may know. So following that air core drilling, we took the time to sit on that and do a bit more mapping and develop some more targets on that ground. We did some aerial photography mapping that identified up to about 38, I think, new targets. A lot of those still need to be ground truth, and we're working through that process, so we can prioritise those for further work. But the Laverton Gold Project is probably the third in priority of our project. So this is something that we'll look to get back into from 2023 with some further air core and some RC drilling. Next slide, thanks. So here's just a summary of our proposed works for the next 15 months. A lot of that is congested in the next 2 quarters, which will include some studies, some metallurgical test work for Hasties, some further mapping, and in conjunction with more RC drilling and air core drilling. Importantly, the air core drilling in the Western Tenement area, we're really looking forward to. This is the first major sort of drill program that's been conducted in that area since Newcrest did their drilling back in the late 90s. And then also we've got the mapping and diamond RC drilling planned for Kiwi, again subject to getting some ministerial entry permits, and then follow-up drilling at Laverton, which we'll look to start towards the end of the second quarter of next year. So there's plenty of opportunities there for results in news flow. So keep an eye on us. And if you want to contact me, feel free to contact me or visit our website for further information. That's it. Thanks, Jane.
Gary, thanks for the great presentation. And I'm really looking forward to seeing the results of that Hasties Deep hole as well. I'll just jump into a quick question now. So based on those results, when they do come through in the coming weeks, I think you mentioned, what's the program of work or of drilling? What's going to be happening up there?
Yeah, look, I think the diamond hole's quite an important milestone. I think it's going to provide us a lot of information about what the potential system looks like at depth below Hasties. Now, we'll get some external consultant eyes looking at that with us to help us understand, because there's quite a lot of alteration that we need to figure out what it means, and we'll benchmark that against this type of alteration and zonation mineralisation systems that are in the area. So it's a little bit new. It's probably the second deep diamond hole into that structural sequence, and that's the Hasties Grace trend. And so there's still a lot to be learnt from that. So based on the technical review of that diamond hole and the alteration, and of course complemented hopefully with some really good assay results, will really drive how we approach our next program. But all going well, certainly we'll be following up with further RC drilling and if not more diamond drilling. Now, if it's the other way around, then we'll obviously we've got plenty of targets to move on to. So we've got a big package, and at the moment we're focused on a 1.4 kilometre trend, and we've got over 65 kilometres of prospective strike to test. So there's plenty for us to do.
Well, I think you're right. That last slide in your deck just shows how much news flow you've got coming up. So I would encourage webinar attendees to reach out to Gary if they do have any other further details. But thank you so much for joining us.
Great. Thanks, Jane. Thanks, everyone.
So next we have a presentation from 5E Advanced Materials with the ASX ticker code F5EA and the NASDAQ ticker code FEAM, a company enabling global decarbonisation with boron. To tell you more, I will hand you over to the CEO, Henry Tausch. Thanks for joining us again, Henry.
Hey, Jane, how are you? Can you hear me, Jane? Hello?
Yep, I can hear you. Ooh.
Okay, good. Yeah, you broke up. So, yeah, sorry, thanks, Jane. So we are a public company. We listed at the NASDAQ in March this year. We were listed at the ASX, and we're still listed at the ASX under a different ticker, 5EA. And you can change the share from from the ASX to the NASDAQ and the other way around. We are building out a vertical integrated boron company focused on decarbonization, and we're focusing really on the high-end advanced materials. And we have a large resource in the US in Southern California of boron, and it also has lithium. Now, let me tell you a little bit about boron. I think a lot of you have not heard about boron. It's in the same family as lithium and rare earths. It is, a super material. It is very strong. It is light. It doesn't expand a lot with heat and cold. So you have many applications. And the key is that a lot of the boron advanced materials are needed for these future-facing applications. It sits in EVs, in solar panels. It sits in windmills, permanent magnets. It sits in semiconductors and a few other applications. So we're really excited about that, and we expect that with these future applications, demand will grow very, very fast. So a quick introduction. I have a few slides of our standard investment deck that you can find at our website. But I wanted to show this slide because, with the markets right now being in turmoil, it's going up and down, we are still, very strong. If you look at the fundamentals here, decarbonization, we are right in the middle of that. You need boron for all these applications. Critical materials, I'll explain in the next few slides that boron is very, very scarce, and having it in the US is extremely valuable and a strong value proposition. Boron is also a micronutrient, so it's critical for food security, and it's also very strong and light. So it sits in Kevlar vests and a lot of military equipment. And all these markets will spend a lot of money in the next decade. Next slide. And this is really the slide that, when I saw this slide, I joined the company. I joined the company in August last year. But this is incredible. So I told you that boron is very similar to what lithium is in rare earths. The same family, except it's a lot scarcer. In order to find a deposit of boron, you need a fault line, a volcano, and an evaporated water body. So it's kind of very difficult. And if you see where the supply comes from right now, 85% comes from two companies. Ethane, which is a government-owned company in Turkey, and Rio Tinto in California. They're an hour away from us. And then what's happening, a lot of these materials, the first product is boric acid that gets shipped to China, similar to actually lithium and a lot of the rare earths. And then a lot of the downstream materials is made in China. So here, as an example, 80% is of the boron carbide is made in China, and then it comes back in the States and it ends up in Kevlar vest and military equipment, right? So what's happening on the right, you can see that governments have taken action. Boron is a critical mineral in the EU. It is a critical material in the US. And our site, the Fort Cady site in South California, has been designated as critical by the US government, which allows us to get some additional funding, and it has a lot of other benefits. Next slide. So here I combine supply on the right and demand. So as I explained, you see the total market here of boric acid equivalent on the left. And you can see that it is expected that the next 10 years, this demand will double. And that's mostly driven by these future-facing applications, EV, solar panels, etc. So this is why I'm saying it's almost similar to what lithium was 10 years ago. On the right, you see the supply. And this is really interesting because you see that two companies supply 85%, 60% comes out of Turkey. Turkey at this moment, high inflation, they need to import expensive energy, and the rest comes out of the US, and there's a few other projects. So supply cannot keep up. So there's a big gap coming, and as a result, prices will go up. And as a matter of fact, in the last 6 months or so, we've seen boric acid prices go up about 80% or so. So it is working. And there's simply not enough new projects to fill this gap. If you look at lithium, there's many projects, right? And boron, again, very scarce. You need a volcano, a fault line, evaporated water body. I'm aware of only 5 or 6 projects. Next slide. I think I have the projects on the next slide. Yeah, here we go. So these are the other boron projects that are currently that we are aware of. A couple of notes. You see our project there in Fort Cady. We are the largest. You can see that some of these projects are in very early stages, exploration stage. Some of these projects are in challenging countries, right? Serbia, 3 are in Serbia, and actually the JADAR project is currently on hold. And I would also say, we have a mineral which is called colmanite, which has been a proven mineral. So we are most likely the first project that will come online. But point is, even if all these projects will come online, it's still not enough to actually close that gap. Right, so we expect that prices will continue to go up, similar to what happened in lithium. Next slide. Now, this is what we're building, and at the bottom, you see the advanced material structure, right? So, we have the raw material in the ground, the mineral, and if I look at the extraction process that we do in situ extraction. So it's not open pit. We don't have to move a lot of dirt or have these big trucks. It's an environmentally light touch extraction method, and then we process. So we make boric acid first, and then we go down to the train here, and eventually we end up with carbide, nitrides, and a few other products there. And the key is you see those dollar signs. So each time you go more downstream, the product gets more expensive, and there's a much higher value in use. So you have a lot of pricing power. And I'll give an example here. So for instance, in your iPhone, in the glass is boron, right? That's, Corning makes that Apple glass. but it's not the the raw material. It's that higher end material that is higher priced, and there's probably only a few grams of boron in there. And so if you double prices, for instance, it really doesn't change the price of your iPhone, right? And there's several other examples. Now, talking about Corning, we just announced a week ago or so that we received an LOI from Corning. It's focused on two things. We're gonna, it is a supply agreement. That means that we're starting discussing with Corning how we're going to do that. And the second thing is, technology. Corning is very interested in working with us to make new value add products and materials. And I'm really excited about Corning because, it's not only a large user of boron, but they also buy lithium. So they understand what the market is doing when prices will go up. And what happens if they don't have any access to supply, right? So I think this is my last slide, Jane. So I want to add one more thing here. I want to give a quick update on where we are right now in our project. So we're currently building a small scale facility. We broke ground in April. We're going to spend $40-50 million on that. Mechanical completion should be finished by the end of the year. It should be operational first part of next year. We have actually completed a couple of wells already as well that will feed the plant. And that plant is obviously very, very important because it gives us product that obviously we can sell, but we also can actually use it as samples for takeoff agreements and R&D purposes. So if that plant is up and running, we continue and we're building a larger plant that should come online in 2025. We're targeting over 200 kilotons per annum, and then over time we ramp that up to we'll probably double that over time. And in parallel, we'll spend time to build out these advanced materials. We do it all at the same site, so it gives us a massive cost benefit. It gives us an ESG benefit. We don't need to move intermediate products around, and it gives us a lot of optionality on which products we can make at what price and who we sell to and which applications. So that's a quick summary. So I open it up for any questions, Jane.
Well, Henry, thanks for the great presentation. Look, we have had a few questions come through. Can you just give us a little bit more info about who Corning are and when we expect to formalize the agreement with them?
Yeah, very good. So Corning is one of the largest specialty glass manufacturers. And if you go actually to their website, they got fantastic videos. They can bend glass, and they think that with glass you can do a lot of stuff, right? So we start discussions now on the agreement, both takeoff and advanced materials. Yeah, you ask about timing. It is a negotiation, so I expect in the next few months.
Well, I think it's still a very impressive LOI that's come through, so congratulations on that.
Thank you.
Also, there's another question. Well, it's not really a question actually, but there have been several new research notes that have been published on 5E advanced materials. One in particular that I did see had a price tag of about $5, I think it was. So look, I would encourage investors to reach out via info@brokerbriefing.com if they are interested in seeing those research notes. But Henry, that's all we actually have time for today. So thank you for joining us. We look forward to hearing further updates.
Yeah, thank you, Jane. Great being here.
So finally, we are joined by Tina Guglielmo, the Managing Director of Bass Oil with the ticker code BAS, a diversified oil and gas company in Australia and Indonesia. Good afternoon, Tina.
Good afternoon, Jane.
Let me bring up your presentation.
Thank you. Lovely. Shall we get started?
Yep, when you're ready.
Perfect. Jane, Bass Oil is, for the last couple of years, has been an oil producing company out of Indonesia. And we've just undergone some growth initiatives there. So we are growing the oil production at our Indonesian properties. But some months ago, we took a strategic decision to add another arm to the business, to the portfolio. And some 12 months or so ago, we started negotiating an entry into the Cooper Basin. We've concluded two successful deals that we are completing shortly. And what they will see us add to this Indonesian business is a high margin Cooper Basin oil production business with the possibility to get into the East Coast gas market in Australia from an early entry from a discovery that has been undeveloped for some years in the Cooper Basin. And I'll just describe that to you. Jane, if we can just slip 2 slides, please. What we've done with the known 2P reserves, we've signed SPAs with Cooper Energy and Beach Energy to acquire the majority and at times 100% interest in this portfolio, which includes 2 producing oil fields that are producing about 75 barrels of oil a day. And at the 2P reserves level, it's quite a favourable buy-in price. And there's 2P plus 2C, that's contingent resources as well as 2P reserves. The acquisition price is very, very attractive. The point here is that we started negotiating and locked away these deals before the oil price started to run away with us recently, so the timing is fortuitous. As I mentioned, we'll be majority owner and operator of 2 producing oil fields with growth potential. We'll talk about that in a moment, and an undeveloped gas field. And we have a high equity interest in the rest of the portfolio that we're acquiring. In the near term, and by near term, I'm talking here well before the end of this calendar year, production that is currently around about 75 barrels of oil a day. We'll be doing some very low cost workover projects in existing oil wells that are targeting to get production up to 300 plus barrels of oil a day. In fact, between 300 to 500 barrels of oil a day. And that will generate some significant free cash flow. And I'll go into that more later in the presentation. We also have a portfolio of very, very attractive exploration prospects in the Cooper Basin in some very, very good addresses. And I'll talk about that in a moment as well. We are currently raising capital. We have a non-renounceable rights issue on foot to raise the capital to complete this transaction. And of course, this is a great time to be in energy in Australia, where we have high oil prices. And of course, it's no secret to anyone on this call here in Australia as to the tightness of the gas market. Jane, thank you. This is just a snapshot here. I won't dwell on this, but you'll see that we're adding from Melbourne headquarters. We're adding the Cooper Basin opportunity, and we've 55% operated interest in South Sumatra in Indonesia. And we've got a very high equity stake in this company from board and management, and our largest shareholder, in fact, is Cooper Energy. Thanks, Jane. The Cooper Basin transaction, if you can focus your attention on the map, you can see that we're acquiring quite a large acreage position in the basin. It makes us one of the more significant acreage holders in the Cooper Basin. The 2 producing oil fields are the Warrior and the Padalla oil field down at the southwest corner of this map with some exploration potential. we call it here XPL 93. That's prospective for oil. And up in the right-hand side, the acreage that we have there is prospective for oil and gas. And in XPL 90K, I'll show you some more detail now. There's the undeveloped Kiwi gas discovery, which we've recently started a feasibility study for to connect that into the existing grid. In terms of the acquisition, we are acquiring both the Cooper and the Beach interests in these properties for a total sum of 1.3 million Australian dollars that we actually have we've previously raised money for. And we're also assuming future restoration liabilities there. I've mentioned the 2 producing oil fields, and you can see the 2P reserves that we're acquiring at Warrior and Padalla, and the contingent resources are more than double of the 2P reserves. So it gives us some very good near-term opportunities. And we're going to be completing this transaction early in Q3 calendar 22 once the capital raising is concluded. Thank you, Jane. Now, this is probably the most significant slide of the whole presentation. If you focus on the actual cash flow generation potential at the Warrior field, knowing that this is quite low risk, this potential, that we're just illustrating here now with a company that Bass is with a market capitalisation here of just over 8 million Australian dollars. The 12-month cash generating potential at these oil prices for the projects that we're looking at, and I've got high, medium and low cases. The medium case for these projects that we're focused on shows us generating our entire market cash and market capitalisation in free cash within 12 months of concluding these optimisation initiatives. And the optimisation initiatives include recompletion. We've identified some significant attic oil potential in the very last well drilled in the field, Warrior 11, which was drilled at the very crest of the field. That oil has not actually ever been addressed in the wellbore. We will be doing that. And we have a significant fracture stimulation opportunity in the Murta formation, which is a formation that has produced significant quantities of crude oil in the Cooper Basin for a number of years now. We will be addressing that opportunity as well. And because these assets come out of larger operators that have been focused on other properties, we are confident that we can actually increase production from existing wellbores some significant percentage. And it's probably at this point that I'd like to also say that in a previous life, when I was managing director of Stewart Petroleum, myself and my team were responsible for the Warrior discovery and the Padalla discovery and the Kiwi discovery. And we, in fact, had in our portfolio most of these properties that we're acquiring again. So it's very, very good to be coming back to the Cooper Basin, and the board and management team here at Bass has a significant positive history with these properties. So I just thought I'd add that relevant piece of information. Thank you, Jane. This is the undeveloped gas field, the Kiwi gas field that was drilled by Stewart Petroleum back in 2003 on 2D seismic. And so you can see in that map that red outline there is the position of the Kiwi discovery, and the red outline shows the structural the structural definition of the trap, and the structural trap has between 1.6 to 5 BCF gas in place. When we drilled that well, it was a significant Triassic gas discovery out of the Calamara with a flow test of nearly 10 million cubic feet a day, and it had plenty of capacity to do more than that. But at the time, we didn't progress the development because it was only understood to be relatively small, and gas prices were relatively modest back then. We were talking $3 and $4 a gigajoule back then. Current gas prices, you would have seen through the press, spot markets, 10 times that volume. So not only do we have higher gas prices in the marketplace, being paid in the marketplace by customers, we also have the benefit of 3D seismic that was shot on in this area subsequently. And you can see two other outlines. One here, you can probably barely read that, but that word in there next to Kiwi it's the Kiwi channel play. And then there is a larger light dusty red outline, which is the Kiwi pinch out play. So the 3D seismic actually did identify the potential for Kiwi to be significantly larger than we understood it to be back then, with a resource size range of between 6 and 50 BCF, which is tremendously economic in any market. So we've started our feasibility study to determine the cost for connection to existing gas infrastructure, and the strategy to identify the actual size of the resource, and that will likely mean that we will complete the Kiwi well for production and put it on extended production test. And from that extended production test, the results are same. That'll give us a very, very strong clue as to how big the structure can be. And if we're right and suggest that, and the results from the producing well or producing Kiwi gives us confidence that it is bigger, then we'll attack it with a drill bit as well. So it's quite a significant opportunity. We will be acquiring 100% of this opportunity. So we have the option to farm it down or to carry it forward ourselves. And we have been approached by gas customers interested in actually writing gas contracts for this resource as soon as we choose to do so. Thanks, Jane. The other thing that we've got here is adjacent to this area in PL 182 particularly. PL 182, we will own 100% of that. PL 182 is in the heart of a geological feature called the Patchawarra Trough. The Patchawarra Trough contains very thick, deep Permian coals that are known to be the source of the majority of the hydrocarbons discovered in the Cooper Basin over its life now, which is approaching 60 years actually. And we are adjacent to a very big push that the Cooper Basin joint venture is doing, led by Santos. Santos has recently drilled a horizontal well called Bean Bush number 2, and that was targeting the deep Permian coals. That horizontal well has been in place, has been placed by Santos, and they will shortly be fracture stimulating those coals. That is probably the biggest technical advance that the Cooper Basin has seen. A success there will actually be the biggest thing that has happened to the Cooper Basin in probably a decade. And Santos is quietly actually working on this breakthrough. And we will own 100% of a property adjacent to Bean Bush with those same coals, significant areas of those same coals. So success by Santos will immediately rub off on us and unlock vast quantities of gas. I'm talking trillions of cubic feet of gas potential that will be unlocked by success at Santos. So we have great optionality there with PL182 and the Kiwi gas discovery, as well as other exploration prospects for oil and gas in that area. Thanks, Jane. Pardon me. Thanks, Jane. I won't spend a lot of time here. We operate 2 producing oil fields in Indonesia. I'll just move your attention to the positive results we've achieved from the recent drilling program, where we drilled the Tangai 5 development well, and you can already see a 95% increase in production between April and May, which is the when we brought the new development well online, and that well will be taking production up from what was 300 barrels a day to 1,000 barrels a day. In fact, we are already doing 1,000 barrels a day in June from that total field. So we are our growth initiatives here that included growth in oil production in Indonesia, all our growth initiatives are kicking in. Thank you, Jane. Okay, just to summarise the entitlement offer that we've got at the moment on foot, we're seeking to raise $4 million. The offer is open at the moment, and about half of those funds are dedicated to growth initiatives in the ground, and we also the other half of the funds are satisfaction of a bond that we need to put in place for the Department of Energy and Minerals here in South Australia that covers the restoration liability, and so that offer is a 1 for 2 non-renounceable offer at 4.5 cents, where we are linking 1 for 1 free attaching option. That option is listed as well, and so they're the terms of the offer, and that's currently open. Thank you, Jan. This is what we will look like after the completion of the transaction. So we have production in Indonesia, 55% operated interest. We will be operating all the properties in Australia. We'll have 100% of the 2 production licenses there, you can see on the left-hand side, and between 70 and 100% of the remaining properties, and all are prospective for either oil or gas or both. So we're pretty excited about the portfolio we've put together. And with that, reflecting back to that cash flow generation chart that I showed you earlier in this presentation, our objective is to take advantage of what we believe is a watershed moment, and that we will be very close to self-funding, if not totally self-funding, by the end of this year, with the only caveat being if there is a deal that is too good to look past, we will look to do that. But in terms of the work program going forward, with the cash generation potential we see in this property, we hope that this will be the last capital raising that we'll see for some time to come. I think there's one more slide that's worth just if you look at the rogues gallery here, and you focus into, not myself of course, but gentlemen like Hector Gordon, Mark Lind and Peter Mullins were instrumental in the growth that we've seen up until not too many years ago in Beach Energy, and through their Cooper Basin sojourn. So we've got a very, very deep knowledge in the Cooper Basin where we're adding our property. And our general manager in Indonesia is a PhD in petroleum engineering in CO2 enhanced oil recovery. And the team in Indonesia has got some really good technical capability. So as well as having production in Indonesia, I will be looking to get some of the Indonesian human resources involved in the Australian operation as well. So it's a pretty exciting time here at BAS, and we're pleased to commend it to you. Thank you, Jane.
Thank you, Tino, for the great presentation. You did actually mention this through your presentation, but maybe just for clarification, you were planning a feasibility study at Kiwi, but I think you mentioned that you might actually, is that currently underway, and when can shareholders?
Thanks, Jane. That's a great question. Elements of it are already underway, and I'm starting to see the results of that through. So we are very, very excited with the economic potential that we're seeing at Kiwi. We'll start the first of those results. We should be available to investors, within 30 to 60 days maximum.
Well, that actually brings me to my next question. So in addition to those results and the closure of the capital raise and the acquisition, probably the Cooper Basin projects, what other news flow can shareholders look forward to?
Within, again, 30, 60-day time frame, we've already started planning the well work that will result in that significant increase in production. So we think that there are some minor tweaks to the facility that we'll be able to do literally within the first couple of weeks of ownership that will increase production by some reasonably good percentage. But the objective is to get to 300 to 500 barrels of oil production a day. Those projects, we'll have executed them. Look, it'll probably be, we're planning them now. We'll start them in about 60 days time. But I'm planning, if you want to use the political analogy, we're building a 100-day plan, and it's a pretty significant amount of work that we're looking to execute within the first 100 days of ownership. So there's a lot of action on the ground and and with the studies that we're doing. So it's a very, very exciting 100 days. Yeah. Jane, you froze for a moment. I think I've got you back.
Today, we look forward to record today's presentation online, and feel free to reach out for further questions. Thanks for joining us.
Thank you.